Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial opinions and make your own financial conclusions. Today is Wednesday, May 11th, 2022, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow blockhead trader Viper XL 007. And Viper, we're going to take a break from our series on retirement this week. We're preparing some stuff, so leave some questions, comments below. This week, we're going to talk about just kind of general trading action that we're kind of getting into and seeing these days. Not going well for me, not going to lie. But before we hop to that content, I want to give a shout out to our Discord, link in the description below. Hop in there, say hi to myself, Viper, a few of the other blockhead traders. Also, you can find my thetagang.com/sprocket888. It's where I post each and every one of my trades, the good, the bad, and as most things are going these days, the ugly. But let's hop to this week's action. Viper, I just don't even know where to start this week.
I mean, I had to laugh because it seems, I don't know, Freudian slip or we're pausing. We're taking a break from retirement series because nobody's going to retire anymore.
Yeah. Hey, those retirement things you have, you've probably lost 30-40% of your value the past couple of weeks. No, I mean, this is, I prepare. I mean, we always talk position sizing, exit plan, have a plan, prepare for this, don't overtrade. I feel like I've done a lot of my rules. I've reserved my buying power. I've prepared for a drawdown of, 15%. And Viper, we're drawing down like 5% a day and things like that. This drawdown is I am literally towing the line right now on margin calls. I've absolutely pulled all my buying power is exhausted up. My positions are just about as red as they can possibly be, and I'm quite confident that when the market opens, unless we see some amazing green candles come in, that I will probably be in a margin call tomorrow. And I'm not happy about it. And it kills me because I do a lot of premium selling. And so by nature of premium selling, you carry a lot of risk when you go get a drawdown. I say risk, but what I mean is you basically carry a large buying power expansion. And if you don't protect for that buying power expansion, you will get forced into liquidation. And the worst part is when you're in that elevated buying power expansion and you liquidate, you're locking the gates. You're sealing your fate. And if it just rebounds just a tiny little bit, like I don't even need to get to my strikes. I don't even need to get into my break even to keep this thing alive. But it's just that line of that forced liquidation, and I'm pretty sure I'm going to be there tomorrow.
Yeah, it's been brutal, and I mean, when like I've talked about before on the show, when I went a little deeper into crypto and kind of down these different mechanics and things that are available, I kind of paused a lot of my equities action and kind of parked a lot of my equities money. And I mean, it's not doing well where I parked it, but at least I parked it, and I was like, whatever happens, it's going to stay here, and years if it takes, I will just wait for it to come back kind of thing. But it's not any better in crypto land if that gives you any respite because it is, I mean, this is just across the board. There's so many things you can point to. But if we try to boil everything down to a very fundamental level, we all know 2021 was the year of just put money on the table and it's off to the races. And, just at a very fundamental level, that's going to pull back. That's going to retrace. And this is what everybody warns you about in investing is get ready to be uncomfortable. And I'd say we're pretty well there. And it's funny to me, not funny, but I mean, it's impactful to me at how it hits you. It doesn't hit you until it hits you of like, oh yeah, I'm ready. Yeah, that's fine. Sure. Yeah, I get it. And
we talk about the mental game, man, the mental game. And there's nothing that can prepare you for it. And this is that moment where you're just like, boom. Oh, whoa.
Yep. Yeah. And I mean, at this point, I'm glad that I was in markets in general, much well preceding this, because when I first got into even stocks, and then obviously when I got into crypto, like this was my greatest fear in both worlds, that I'm going to get in and it's going to nuke and money just disappear. And at least I was in them both long enough to be like, well, no, that's not, like I gained trust in both of them, and learned critical lessons. So despite the blood red nature, I'm not panicked because I'm a little more rounded on time horizons, all the things we talk about. The only thing I'm panicked on is not having been smarter on profit taking, and this applies to both equities and crypto, not being smarter on taking profits to be ready for this. Maybe not this big, but any drawdown, to have capital ready to deploy. But I mean, obviously that only happens to a point. I know that you carried a strategy where you had capital ready to deploy, and we're still deployed out.
Yeah, no, I know exactly what you're saying, and you can go back to previous episodes. I don't even know what episodes they were in, but I distinctly remember preparing for a rainy day, and I'm saying, put this aside, hold this, let's put my insurance out there, and I got head faked out, and I got impatient, and I'm like, okay, yeah, that was it, that was the pull, that was the pullback, we're going back to the races, and we're not to the races yet. Well, we are to the races, but in the wrong direction. So I guess Viper, I'm really in a holding pattern because my account is just red. I'm in closing positions only. I'm not quite to that margin call. Probably be there soon. My guess is tomorrow. What have you been doing? I mean, I've tried to play a little bit of the crypto game, but that just makes me sad because gas prices seem to be going through the roof, and my tokens are all going down, and I'm just like, I don't even want to turn on my screen. You say you're glad that you were in the markets before now, and I am too, because man, if I'd have just started, it'd be like that, first taste of whiskey that you have, and you're just like, what was that?
Yeah.
And this is, I'm glad I kind of know that, hey, this too shall pass, but man, this does not feel good.
Yeah. And I mean, so because I've been so focused on crypto, I think I've been focused on it for a couple of reasons. One is just continued fascination and exploration. Just feeling the cycle. So the time I came into crypto, we were maybe 3/4 of the way up the mountain. And I entered there, and then we peaked, and then we started climbing down the mountain. And now we've fallen off the cliff, and our guide left us. We're on our own.
Oh, Sherpas.
But I think two reasons I've been focusing on crypto is one, like I said, all of that, just fascination. But two, I feel like even in this moment, there's just ways to still be creative with your money. And don't think you can just run here and escape it and escape trouble and whatnot. Please. Everything we've talked about on past episodes, the pitfalls, the rugs, and this, that, and the other. It's a very landmine intensive world, but when as you very, nibble bite size, get familiar with the landscape, I feel like there's ways to be creative that you just can't do in the equities world. And that's kind of what's keeping me going right now, is finding these, little ways to get creative, finding some neat strategies for some delta neutral strategies. Like what in crypto, like you can have a delta neutral strategy, but, so I've kind of been doing stuff like that. What I wanted to talk about today was using my favorite on-chain exchange platform called GMX, and just kind of talk through a couple of things. So one thing is just some fundamentals of price action trading. So I had a little day trade session where I kind of recorded my thoughts as they happened. These are by no means the perfect day trade price action thoughts, but I just wanted to throw something out there of like, in this moment in time, this is how my brain processed it. Could be right, could be wrong. It ended up working out pretty well. But I wanted to go through that and kind of just show what was going through. And then during that session, I got creative in one of these ways that I mentioned of how to do something that just isn't possible in equities world. And I haven't done it again since, but that's because we are just constantly drilling down. And as you'll see, this play that I have kind of requires a little crab walk, and it kind of requires a little sideways action to really be impactful. So kind of want to go down that rabbit hole.
All right, let's do it. Let's hear about this because I'm intrigued.
Yeah. So if we take a look, the setup here is obviously we're looking at the avalanche chart. So again, I've said it before. I say it in the Discord. Like, I'm just an AVAX maxi right now. Like, that's just where I'm using the protocols that do these things. And from a technical standpoint, this is also a blockchain that fascinates me. So we are focused entirely on AVAX. So here's the chart, and this isn't the full chart. This is just the Coinbase chart. So Coinbase listed Avalanche back in September 2021. So that's all the data we have on this chart. And I laugh about that because we're well down here now, spoiler alert, in modern times. I've rewinded the chart to go to the day that I did all this. But the point on this chart was this big yellow major level line. We had this initial swing where we pumped up, we came back, we tested, and then we launched. And we launched into all-time highs way up here around 130. I mean, we went all the way up to 147. So that is the swing to beat as far as all-time highs. Once we started losing that level, now we're officially in a downtrend, and we have not gained any of these major levels as we've dropped. So the point of this is a major level to me, and that's always important to point out your anchors as you're going along. So I noticed, I was like, all right, so we had a test back here of the major level. These were kind of close enough that you maybe could count them. And then we were obviously headed back down here again. And so I was like, all right, I want to pay attention because I think this is a major level. And what that means in terms of price action and whatnot, it means my thesis is we are going to bounce or we're going to fall through the floor. We're not really going to hang out too long at this level, but we might do a little shimmy shake on it. So that's the setup. And then this is just kind of how the price action unfolded as I was watching it. So if we play the tape, we can just kind of cruise along here. We can see we come down to the level. And we go through the level. I think this was a couple days before I actually started trading. I was just noticing, I was paying attention as this was unfolding. And then we come up, we test the level and we reject it, and we come up and we test it again. And this time, as we come up to it, we get a little bit past it, but then again, rejected. And you got to remember that you're never going to nail these. You're never going to nail these levels. Like this yellow line I drew, there's a fudge factor there. So the important thing here is we kept trying. I mean, we were making new local highs. So that was interesting to me, but we also kept failing to regain this level. And then coming up here was when I was like, all right, now I think I'm ready. And by that, I mean, we have been sideways, as you can see. We were sideways for a little while here. And then right around here, as we dipped back down and then started coming back up, I was like, all right, now's the time that I want to do something. So what I did then is now I look at the chart and I was like, okay, so here's something I want to pay attention to. Everything we talk about with swings and price action, it applies in any time frame. And what happened here was we had a swing as it came down. This swing failed to make a new local high from these swings that came above it. And then we lost this level. So it held, it tried, it failed. It did this little sideways thing, and then we failed the level. And so we got this big swing down. So the theory of price action says that we are still trending down if we cannot regain this green box. If we reject, if we get resistance off of this green box, then we're still in the downtrend and we're still going to keep going down. If we can break through it and we can get support off of it and then break up again, then now we're officially trend reversed and we're going up. So what I saw here is I had this clearly identified as like, all right, this is the box I care about. Price was still flirting around this major level. However, we were, as you can see here, we were kind of rejecting off of it fairly consistently. And I was like, all right, so the first thing I tried to do was I was like, we're on this sideways run here, and wouldn't it be cool if I didn't have to just watch this chart, if I could say I want to short this and I want to long it at the same exact time. And the way this works on this platform, which I'll walk through in just a second, is there's a liquidation line where if I say I'm going to short this and the price continues to go up, there is a set line where this is a collateralized loan, basically, where if it goes across a certain point, whatever collateral I put up to borrow the capital to make this play, it's going to get liquidated. I lose that money, and that goes back to the stakers whose money that I borrowed for that. So that's not incredibly inherent. So let's pause and take a look at what I'm more specifically talking about here on the GMX platform. So on here, you can long or short. And in this case, Avalanche. You can also do Bitcoin and Ethereum on this platform, but I always do Avalanche because that's the chart that I'm most concerned with. And basically what we're doing is, like I said, so you would say short here, and this is a leveraged, collateralized temporary loan or whatever you want to call it. So I would walk in and I would say, all right, I have 2 AVAX, and that is my risk tolerance. And right now we can see that that's $64. If I were walking in, if I was going onto the stock market and I opened up a trade, $64 on $1,000 investment or something is an acceptable loss to my trade strategy. So that's how I look at this collateral here, is whatever I put in here is my acceptable loss, because I'm going to leverage this to become whatever capital that I would, put up if it was my, just full on non-collateralized capital. So for example, I say 2 AVAX and give me 14.9x leverage, which means it's, approximately, in current prices right now, approximately $941 US. So I'm borrowing from the stakers the delta, the difference between the $943 and $64 here. And they're saying, we're going to let you do that, but if the price, because this is a short and the entry price right now is $32.30, they say for 14.9x leverage, your liquidation price is going to be $34.70. That liquidation line changes. You can see that change as the leverage slides, because we get more risky and thus more money borrowed. That liquidation line comes down significantly if we leverage higher. And they say if price hits this is going to go into a smart contract. So that's, again, what we've talked about as benefits of the blockchain. This is locked in. This is programmed. If price gets above this, then these 2 AVAX get liquidated and sent to the pool that then gets distributed to all of the stakers who are providing this pool of money to borrow from. And also, they're going to take this this fee out of it as well. And this fee is charged by the hour. And there's an equation here that it's the assets borrowed divided by the total assets in the pool times 0.01% per hour. And that is a fee that accrues over time. The way it accrues in this case, the liquidation line just gets closer and closer to the entry point. And that's kind of the gist of how this works. But the key thing I wanted to capitalize. Go ahead.
So when you're talking about the fee here, I'm piecing this together in my brain. The fee is actually coming out of the 2 AVAX in this case that you're putting up. Is that right?
Yes. Yeah, it's getting...
The reason the liquidation lines come in is because that ratio that you talked about there of your leverage is increasing. So as that fee eats into that AVAX, it's effectively boosting your leverage because there's less AVAX there. And as you boost your leverage, that's bringing that liquidation line in. So the most you're risking, your highest loss in what you have on the screen is always 2 AVAX.
Yes.
Is that okay?
Yeah, that's correct. And that's and again, thinking in the world of smart contracts, because this isn't something anybody can touch. Once it goes onto the blockchain, it's locked. So I'm taking 2 AVAX and I'm pouring this gas into the can and saying, here's the money that was mine and I'm now placing on this bet. And so then, this fee just nibbles away at it while it's in there and feeds it, so to speak.
Okay.
So what I thought was interesting is I was like, well, now wait a second. There's one thing that you absolutely cannot do in the equities world. No exchange will let you do, and that is to long and short something at the same exact time. Whatever one you open up first, they just reconcile that as you open up the second one because, logically that makes sense. Like you're shorting this, so now if you're going to long it, we're just going to buy those back that you've already borrowed for the short. However, the nature of the blockchain is, like I just said, these are locked up into a smart contract, buttoned up, sent in the package, put in the mail, and shipped off onto the blockchain. And now, as long as I have more money, more AVAX in my wallet, I can do another box. I can pack another order, and I can send that out. And that kind of opened up some interesting thoughts here. So as this was going up, the first thing I did, and if I'm being fully transparent, this idea kind of wasn't fully thought of as a plan. It was a reaction. And so what happened here is right here, I opened my first short because I was like, all right, look at this. Check this out. We keep hitting this level. We keep rejecting off of it and going back down. So I was like, I want to bet that this continues to go back down. So first I just opened up a short. And then as we play forward, whoops, that was the worst short I could have possibly opened. I literally opened it on the bottom.
That's how it always works.
And so when that started to work against me, I was like, oh man, like where's my liquidation line? So we actually skipped over it, but this was this was sped up too fast. But as it started to go against me and we started heading towards my liquidation line, I was like, no, wait, what? Can I long it? And so right here, as we were, let me just zoom in and make this a little more visible. As it was working against me quite significantly, and we broke up above the major level, I was like, well, now my thesis is completely broken. I thought we were going to bounce off of yellow here and go down, but now we're pumping up, and then we got this candle to come back down, and I was like, all right, so what happens if I long it as well? And my long liquidation line goes down here at 58.66. So now this is the situation. Ignore the fast forward that I just did here. Sitting here opening the long, I was like, all right, so now I have these two, and now my mind starts to connect these dots of like, wow, I mean, this is nice that I was able to do this. I wish I would have done this right at the same exact time and not had this big gap here in between these two. But I was like, but now this is kind of cool, assuming that I could have gotten a better entry on both of these. But what does this mean? Because now I have two positions. One has not been liquidated yet. Spoiler alert. So it meant that I've effectively, let's just say it was 2 AVAX. I think it was less. I think it was 1. But let's just say each one was 2 AVAX. So, and let's just say 15x leverage. So you can see when you open these, you see exactly the collateral value, but you also see the net value of the position that's open. And basically, I calculated based on those numbers what my break-even range was. And this was not factoring in those fees. This was just to say, of the collateral that I packed into both of these boxes, where do I need price to go to become profitable, where profitable means I've covered the cost of the failed box that went the wrong direction. And that was if price rises above this green box or if price dipped below this green box. As soon as we're out of this green box, I'm profitable, and that's assuming both positions haven't been liquidated. So worst case scenario, as we see starting to potentially form here, was I have this short liquidation here, the long liquidation here. If we ran up, liquidated my short, and then we ran down, liquidated my long, that's worst case scenario. And then salt in the wounds, it comes up and then blows through the top or something like that. That's kind of where I want to play more with this tuning to get them at the same opening, play with the liquidation lines, and just, kind of straddle in a channel, if you will.
Yeah, this is very interesting because I'm drawing so many parallels in my brain with the options world, because effectively what you're explaining here is in the option world of basically buying a put and buying a call at the same time. You're giving yourself the option to short and the option to go long, which you're right, in the equities world with a raw equity, you can't long it and short it at the same time. In the options contract world, you kind of can, because you can buy a call and buy a put at the same strike, which is effectively what you're talking about here. And it has a similar phenomenon. And so let me just pull this up here real quick. So what I'm going to pull up here is the SPY. And effectively, the SPY right now, that's the S&P index, is probably around 395, 394, something like that. And so what you can do is you would take the option, you would buy a call and you would buy a put. And what I've got here is a profit loss graph. And you can see it's going to cost you money to buy those options. So you pay a premium for them. And so kind of your worst case scenario, if you don't get high enough to the downside, if you don't get low enough to the downside and you don't get high enough to the high side, and you stay in this kind of low range, you effectively lose money the whole time. Slightly different mechanic because you're not really getting liquidated out of your position, but you can see that on the high side, I need to get above, 424 to make profit on the high side, and I would need to get below 365 on the low side. And then the depth of this kind of V shape, how far down below the zero is, in the option world, that's driven by volatility. So the higher the volatility, the more premium you pay for the option. And the more you pay for the option, the farther you have to go to bust out of here, which is the interesting part that's standing out to me. Because if I think about that metric on how they charge the fees, I didn't see anything about volatility, which is kind of cool. And correct me if I'm wrong, if you think there's something with volatility in there, but if you got into a token that is extremely volatile, means the swings are way high, way low, all over the place, right? The strategy you're laying out, you can do if the volatility is high, or if the volatility is low, it costs the same, I think, to do it. And the way that's the reason that's interesting is because when volatility is high, you have a higher probability that you're going to swing farther, because volatility is just a measure of the magnitude of movement. So in the option world, the higher the volatility, the more the premium, which means the more movement you need before you can actually make money, because that premium goes into there. But what you're calling out is interesting, because if you got something that was super volatile, it's going to cost you the same to place that bet. And when you're buying options, you're doing the same thing. When you buy an option, now we always talk about selling, but let's just put that aside. Because when you buy an option, whatever you pay for that option, that's your biggest loss right there. If nothing pans out, you've lost that money, which is exactly what you have. You have, hey, I paid 2 AVAX. The worst case scenario is I don't get that back at all. Best case scenario, I get somewhere above 0 back. So this is kind of cool, actually.
Yeah. Yeah. And there's nothing about volatility in here, because this is sort of a roll your own option. And it's not a packaged thing where volatility factors into the price of that packaged option that you just laid out there.
And it's also interesting because you're tying in a time component, but your time component in the option world, right? Options expire. So you reach a certain point and they're done. What you have is interesting because it's basically indefinite, almost. You have a time component. It's sneaky because it's embedded in the fee that's going to eat away at so an option contract has a defined time, but your contract is interesting because it decays to 0, like an option also decays to 0, except I don't think you know when yours is going to hit 0.
Yeah. Yeah, correct. And now I'm thinking, what happens if, and I honestly don't know because I just thought about it just now, but like if price goes way up and I'm shorting, and so I'm way in the profits. I mean, this is infinite profit because there is no cap. Like it just goes and then you just get more profit as price goes up. So in an unrealistic world where price just flies up and I just let this thing run, that fee margin is going to continue to eat away at the 2 AVAX I put in the box. But I'm still in the profit. So liquidation is not catching up unless the liquidation line actually traces the big gaps. Maybe that's more what it is, that it would actually catch up no matter how far it was running, that the liquidation line does not move linear to the price movement is maybe more what I'm thinking. But at the end of the day, like we said, I've put enough food for that fee monster to eat 2 AVAX worth. So at some point that's going to run out. They're not just going to let that fee run out and then be like, well, you crack the system, you get $1 million. Like it's the liquidation line has to catch up at some point, but it is fairly slow in its progression, especially the lower the leverage you use, because you like you just said, that progresses more slowly that way. But it also goes to the point of a highly volatile token. I mean, you only have 3 to choose from in this case, but the more volatile it is at any given time, the less time that you require the thing to be open and the less fee that happens there. We had a local high kind of set here, so that became what we needed to beat. We tried again, we missed it, and then we came back up, and I wanted to make sure I marked this local high now, because that's the first step to getting a trend reversal is setting new local highs. And so I wanted to make sure I had that marked on my chart just to make sure I knew when I'm zoomed way in, where is that line, because I need to keep an anchor to that. And so that was part of what ended up unfolding. Now, if we leave that red line there, we started to obviously get above, and then we got a close on the 5-minute candle. I think the 15 might have closed above as well, but we got a closed candle above that line. So now we've officially made a new local high. So again, staying robotic, That is now continuing the trend pattern up. And so I was like, all right, well, if this thing's going to go up, and so at this point now, jumping to real time, the short liquidation. So my short is gone. So now as this big red candle comes back down, internally it's like, up here comes worst case scenario. We just go down here and lick up my long, and then now I'm just out. But I was like, all right, so now we're clearly in an uptrend. I need to break out of this box. And this goes to a little bit of entry, not the best entry, because this thing kind of came together haphazardly. But I was like, what's my profit line? Where am I going to take profits and just wash the board? And let's start over, try it again with much better entries and thought process. So I was like, all right, this green box, you remember when we drew that? I don't really want to mess with this. I don't want to touch it. I don't want to, maybe we break through it, maybe not. Like I said, I knew at this point I had a bad entry. Let's just get out of this green box. Let's close everything, take the profits, and then let's reassess. So as we get going forward here, bingo, we came up, we got really close to that. And so I was like, you know what? That's fine. I closed out this long, and it was marginal profit because, this wasn't a great entry. However, once we got up here and got a rejection off that, I was like, well, let's clear the board of this previous maneuver here. And then this was just a one last goodbye, where I was like, let's short this because this was now, it was a new high, but again, price action, as we got a rejection off of that this is the level we need to gain and test and get support off of. I was like, well, let's open a short here because we're getting a resistance off of it. So we're going to dip a little bit before we go back up and test it and figure something else out. So this was just a cheeky little trying to, emotionally trade and get some of that not great entry back before. So then as this unfolded, I'm shorting. And so it gets all the way back down to the major level. And I was like, all right, this is the major level. And now going bigger picture, we've broken it. We've gone back. We've tested it. And so far, it looks like we're going to pass that test. So I was like, all right, you know what? Let's be done. As soon as we got back to the major level, I wasn't even waiting to bounce. I closed the short, squeezed this scalp in, and then walked away with a few lessons learned on possible strategies in the future. This pseudo crypto straddle, if you will. And that was the gist of it. I hope I covered some of the thoughts that go through my head while day trading, the way these levels, it's critical to me, and I'm trying to get better about this, to be less emotional, be more regimented, get a proper read on the chart before I touch anything. And at least over the past week, that has saved me a lot, because there's been times I've sat down and I've been like, all right, let's just open something. Let's go. And I've, pulled back and been like, let's read the chart for a second. And I read the chart and just making something up. Like, let's say I sit down on the chart and we're like all the way back in time here. And I'm like, yeah, look at this. I just sat down. We're climbing up. Clearly, we're gonna continue the downtrend that started when we lost this level. And then you sit down and you're like, whoops, bloop, and then we go up, and it's a terrible entry. So trying to get better about that, where I read the chart, I mark all these levels, I mark local levels because I'm going to be on a very small time frame, and then I sit and wait and look for the setup. And that doesn't have to be on a tiny time frame like this. That idea of a setup to the price action, it happens all the time. We have a charter extraordinaire in the Discord group that, just you can do it on a daily chart and, in stocks that it doesn't have to be this 1 minute, 5 minute candle thing, but it can be any time frame that you're looking to jump on.
Super interesting. I might have to look into that a little bit more. Doesn't look like least on the surface, that I can leverage the same strategies I like to do, which is selling the premium. I guess I would effectively be selling the premium if I can participate in the pool side and be the guy that loans you the leverage.
Yeah, so that's, I mean, it's a whole thing, but just a teaser of that delta neutral strategy that I talked about, because it's very much that. So the idea behind it, and this is super rough, don't quote me, but basically, so there's a guy on YouTube, it's called The Calculator Guy. Highly recommend his stuff. He loves to build calculators for different trading strategies, yada, yada, yada. This delta neutral strategy with GMX, he basically has a calculator. You put in like how much capital you're bringing onto the table, and he helps you split it up into these different buckets. And the bucket is how much you need to go take to the pools. GLP is the governance token. How much of that money you need to go take, stake it in the pool. And now remember, if you're holding a token, and especially if you're staked it into an LP pool, you're going to lose money on token going down in price. You'll have your impermanent loss, but also the token just gets less in value. And so his calculator calculates, okay, so what's the rate? You give it the rate of the pool emissions, the APR on the pool, and then it will also calculate what kind of short at minimum leverage you have to open up, because the short is going to gain profit as price goes down, and it will effectively offset the value you're losing in the pool, and thus you will be, let's use the word very loosely, immune to volatility in the market. Occasionally you'll have to re-up the pool or kind of adjust your levels, but the idea is to give you pure exposure to the pool's APR, and you're hedging your losses there with the short. That's the high level take on it.
No, I'll definitely have to check that out, because that's effectively what brought me into the options world, was to really trade options delta neutral. And you're just profiting strictly off of volatility in the case of options, where you don't really care if the market goes up. You don't really care if the market goes down. You're hedged each direction. And then in the option world, you make money on the premium of selling the option, which in what you just described is the same thing. The pool participants are the option sellers, and they're hedging those with buying the options, effectively making the delta neutral strategy as kind of like a pseudo volatility selling.
Yeah. And then to make sure we continue to not paint rosy pictures, because this is a crypto chunky lunky world, there was a bad experience this morning I had with GMX, and this is not necessarily GMX's fault. It's just the byproduct of an on-chain protocol. You will always be exposed to gas. These are large contracts. So first of all, your gas is always high on these contracts, and you need to factor that in to your play, which is something, I mean, it's almost like going back to the days we talked about where trading on an exchange had a $5 broker fee or something like that. You need to get back into that mentality.
$5 when it was a good deal. Man, my first trades were like $40 a trade.
Yeah, exactly. Well, we're right back there with gas these days. And network traffic, holy shamoly, don't try to trade a massive moment on the blockchain and on the blockchain. And so this morning was a massive collapse of sorts, for whole reasons that we could do a whole video on if someone's interested. But point is, the Avalanche blockchain hit volume that it has never seen before in its history in one day. Daily volume was through the roof. There was just a mad bank rush on people selling, but then also hitting a critical low level. All these buy orders coming in. Gas, which we talk about a lot. Let's say 60 GWE is a normal low gas day. We were up at 1,200, 1,300, 1,400 GWE because there were so many transactions going through. And the way GMX functions is you put in an order, which then gets delivered to a bot who goes and executes your order for you on the blockchain. And all of GMX's bots short circuited and shut down when they saw the gas. They ran out of their own gas bill, and so there was no servicing of orders. And I, in particular, it was on the CPI news, the CPI numbers this morning. That was part of the collapse. I shorted it, and I was like, you know what? It might bounce, but I want to short this news because we're just in a bad session right now that I just don't see that really getting a bounce. So I shorted it. It crashed hard. I was just I was up to 313% profit on that short. Never got it closed. Got all the way back to break even. Got all the way up against liquidation line. And I was actually messaging with one of the developers at GMX who I think once he saw how small my entry was, it was like 2 AVAX. It was like, oh, it looks like you're low on gas. I just sent you some AVAX, and he sent me 2 AVAX. So I got my money back, but that should not be expected. And then everything became unstuck, and I got break even. So I actually 2x'd my money, thanks to him. But point is, that stuff happens on this trading platform that you just do not expect. You do not get on more modern equities platforms.
So that brings us to the end of this week's episode. Like I said, this is probably, I wouldn't say that we are long trading careers. I've placed my very first trade in my modern era of trading in late 2019. So I am by no means a seasoned veteran. In fact, you could largely say, aside from the Corona crash in 2020, I've largely just been in a bull market. But this is definitely the reddest I've been, and it was kind of nice to hear a little bit about this kind of alternate strategy in the crypto world this evening. It's going to give me some food for thought, something to look at. It's like a pseudo way that I trade in the equity world. Probably not going to be jumping in anytime soon because I got to lick my wounds here in general. But here's hoping to some lower gas fees in crypto land, because my rooster, and they need fed, and it's really expensive to feed him with the gas prices.
Hungry boy. AVAX keeps getting cheaper, so gas is going down. Value of gas is going down.
Yeah. That's true. So anyway, I hope you guys all kind of keep your sanity here. Just know that this is pretty much exactly the mental game that Viper and I say, when it gets real, it gets real. Like you'll never know what we're talking about until you're there, and then it's going to hit you, and you're going to be like, oh, this is not what I expected. So that's where we're at. So good luck out there. Hopefully we can at least go sideways, pick up a little bit of steam. This spiral down to inner earth is just not that fun. So don't lose hope. Stay smart out there. And remember, think outside the block.